Good morning, gang. Happy Saturday morning. Okay. We're a little bit more than 2 weeks out from the election, and right now it kind of looks like Trump is probably going to win. Good. Okay. And as we've all positioned ourselves for what's going to happen going in the future, a complete change of government throws a monkey wrench in all of that. Okay, I mean, as we stand right now, we have a Democrat president, a Democrat Senate, and a Republican House. It looks like in a couple of months we are going to have a Republican president, a Republican Senate, and a Republican House. Okay, almost a total flip. That's going to change stuff, And the biggest thing that concerns all of us, at least I think, is the economy. Is our money, is our personal economy. Everybody can talk all they want about the GDP and how the country is doing as a whole, but in a nutshell, what most people are most concerned about is their own personal economy. When they sit down on Friday or Saturday after payday and go, okay, the bills are due, let's pay them. How are things going to change? Well, let's take a look at just some of the things that have come out here in the last 24 hours. The government reported last night, of course on a Friday, what the interest was paid on the national debt for fiscal year 2024. Remember, fiscal year ended September 30th. $1.1 trillion in interest is what the government paid. It's a lot of money. Okay, it's more money than any of us are ever going to see in our lives. It's probably more money than it's ever gone through your hands in your entire life. Almost certainly is. I mean, trillions, write out a trillion sometime and realize how many zeros you're writing. Let's take a look at gold and silver. Gold broke 2,700 yesterday for the first time ever. I kind of feel like I really was short-sighted on my prediction at the beginning of the year, said that we'll cross 24. And we smoked 24. How about silver? Silver closed last night at the highest price it's been since 2012. Yeah, okay, 12-year high. You take a look at the stock market, and people go, okay, I need to save for retirement, my 401k, my IRA. Maybe they're saving for buying a house, or hell, at this point, you need to put money in the stock market to save to buy groceries. If you go through history and look at the average returns of a stock market under a Democrat president or under a Republican president, there's a stark difference, okay? The average return under a Democrat president annual return is about 7%, okay? Which, if you know the rule of 72, means you will double your money in about 10 years. The average return under a Republican president of the S&P 500 is about 3%, which means it would take you 24 years to double your money. Compounded interest, et cetera, et cetera, et cetera. Okay. And everybody goes, well, the stock market's not going to perform well. Until you look at the last term that Trump had, and the average annual return of the stock market from 2016 to 2020 was 11.8%, which means you had doubled your money in nearly 6 years. Okay. So are things all rosy? Oh, no. Okay. I had a good conversation with somebody last night, probably over an hour, and a lot of the questions talked about money. Now, I'm not giving you financial advice. This is my opinion. All right. So you do what you want to do, but I'm going to do what I want to do. And when I said get out of the stock market and get into gold and silver last year and pay off or 2 years ago and pay off your debt, yeah, that probably was a pretty good idea, because gold and silver have significantly outperformed the stock market. I mean, big time. You figure gold's up 50% in 2 years, silver's up about 80, so 80% in year and a half, so thereabouts. I mean, we were buying silver last summer at $17, $18 an ounce. Now it's 33. Okay, just saying. So how do you want to position yourself going forward? I'm still not convinced the stock market's a good place to be. Okay. I think there's way too much froth in the market right now. The market is not trading on fundamentals at all, meaning on the prospects of the companies. It is trading purely on speculation. The day traders of the world are what's driving the market. That's why you're seeing fewer and fewer stocks go up, and the ones that are, take NVIDIA, for example. I mean, how it just keeps going to the moon. Why? Because everybody's chasing returns. There's a lot of companies that haven't done anything or have lost money. You're getting a narrowing of companies that their stock prices are going up, and when they do, they go up astronomically. I'll say this, I'm going to throw one thing out there, and those of you guys that are old enough will remember this. Go back to my brokerage days. You go back to the 70s, the 80s, the 90s, before the internet, okay? And if you wanted to buy a stock, okay, you wanted to buy shares of, I don't know, Google, for example, you had to pay the broker a commission. And depending on how many shares you bought, I mean, that was going to be a few $100s. It may have added, it could be a few thousand if you bought a lot, but it added 50 cents to your cost basis, $1 to your cost basis, and you did it, okay? And so you needed that stock to go up 1%, maybe 2% to hit break even, not including the sell side commissions, okay? So people had a tendency to hold on longer. Now, with all the online trading and zero commissions everywhere, you can buy a stock at 9:45 in the morning and sell it at 10 o'clock, and if it went up a penny, you made money. Still had to pay taxes on it, but immaterial. And there's a lot of that going on. I mean, and we've seen that for 15 years. You know, that how to a day trade. You see the spammers come in our comment section all the time on, I follow so-and-so, how she made me $1 million or whatever it is. And of course, I delete every one of them because every one of those people is a piece of shit scammer. But that's kind of what's going on there. So what am I looking at? Well, okay, let's get into the next one. The housing market. We all know there's a lot of froth in the housing market. Everybody's house has gone up drastically in value. You know, people aren't selling their house because they got to go buy a new one. The mortgage rates are too high. They're like, forget it, I'm staying here, okay? And as much as everybody will say, gee, it's so great, look how the value of my house has gone up. Yeah, which also means your insurance goes up and your property taxes go up. But again, neither here nor there. So what do you want to do? Well, eventually the housing market's going to come down. We've already seen it. It's starting to, the frothy values of homes are starting to come down. People are putting outrageous prices on properties and they aren't selling. People are going, okay. The buyers are going, I'm not paying that. Okay. The sellers are now like, okay, I got to come back to reality. You know, my little postage stamp lot here, I'm not getting $1 million for. I mean, I think I told you the story about the moron who lives next door to me who bought an acre he bought an acre for like $8,000 a couple of years ago, and he thinks he's going to sell it for $50,000. You wonder why there's been nothing done with the property for years. Nobody's even remotely close to interested, and at that price, it's not worth it. Okay? It's worth about $8,000, maybe 10. But when you start looking at it, can I buy property? I wouldn't do it now. Can I put money in the stock market? I wouldn't do it now. Can I put money in gold and silver? I don't know. We're a little frothy there. We ran up pretty quick. I'd certainly wait for a pullback there. Does that mean we're going to get one? Not necessarily. We may never go to 32 again on silver. We may never see 2,600 again on gold. I don't have a crystal ball, unfortunately. I'm going to watch for a pullback. So what do you want to do? Cash. Okay? Cash is a great idea, except you lose spending power with cash. All right? So again, going back to my conversation last night, and the question was a little bit along the lines of, what am I doing with my money? Now, I've mentioned to you guys many times, I think 20% of your investable assets, I'm not counting your house, that's not an investable asset. I mean, even though it's an investment, you're not going to sell your house to buy groceries. You're not talking about your car or something, your investable money, your savings, the stuff that you want to retire with or whatever your goal is. 20% in gold and silver. My personal opinion. I know conventional wisdom says 5 or 10%. That's great. Conventional wisdom works in a conventional economy. We ain't there. So 20% of your investable assets in gold and silver. Now, cash. What to do with cash? And you've heard me say this many times as well. 6 months worth of bills in cash. Now that's your electric bill, your phone bill, your mortgage, your car payment, your groceries, whatever it takes, whatever you need to run your household. And I know people say, holy crap, my bills each month are $4,000. You're telling me I need to have $24,000 in cash in my house? Yep, I am. Okay. But then what to do with the rest? Let's say you have $100,000 in investable assets or more. Okay. Well, let's see. If I have $100,000 in investable assets and savings, I'm going toward my retirement. Put 20% in gold, that's $20,000. I put $24,000 in my safe in cash to pay all my bills for 6 months. That's $44,000. It means I got $56,000. What to do with it? And this is where it gets interesting, because you need to do something there with it that is going to outpace inflation. Now, officially, the inflation numbers right now are at 3.2%. Believe it, don't believe it. Okay, I'm just saying. We all know the spending power of a dollar has lost 99% since the advent of the Fed, right? Okay, what used to cost you a penny now costs you $1. You got to do something with that money. You need that money to work for you. What's your risk tolerance? Maybe you put it in a savings account. Maybe you put it in CDs. Maybe you put it in investment grade bonds, not AAA stuff, not insured, but, single A paper. Maybe you're a little more aggressive and you buy junk bonds. Maybe you're a little more, or, in that same aggression and hey, you know what? I'm going to dip my toe in the stock market. Yeah, you can do it, but you need to seriously look at the situation and go, what can I afford to lose, depending on how much risk you want to take? Putting money in your safe, you're going to lose spending power. Just happens, okay? Putting money in the stock market, stocks go down too. I mean, I still think we could easily see a 30% correction in the stock market. When? I wish I knew. So what do you do with that $50,000? Well, let's spread it around. Let's say you're like me and you're risk averse. At my age, I don't have a whole lot of time for my money to collapse and then come back. When you're young, you can take a lot more risk. You've got plenty of time before you retire for it to rebound. When you get older, you get a little more risk averse. It's like, okay, this is what I got. I don't want to lose it. So you have it in savings accounts, or you have it in CDs, or you have it in AAA paper, corporate or government, whatever you want to do. And I know some people say, well, gee, I can't do that. I'm telling you, this ain't financial advice. People ask me what I'm doing. I'm telling you what I'm doing. Okay. Where? Well, personally, I've got 2 bank accounts and a credit union account. I've got a national bank, I've got a local bank, and I've got a credit union. Why? It's called diversification. All right? I've got some money in each. If the credit unions go under, I don't lose everything. If the regional bank gets bought out or collapses, I don't lose everything. And I know FDIC or whatever. Sure, go read the paperwork on the FDIC. They have 99 years to get you your money back. I ain't living to 157, guys. So diversify that way. The name of the game in everything to keep yourself financially secure, you have to pay attention to your risk tolerance, and you have to be diversified. You don't want all your money in gold and silver. You don't want all your money in cash. You don't want all your money in the safe in your bedroom. You don't want all your money in your bank. You need to have it in different places, because there are no guarantees in life. I've got all the money at home, that way it's safe, until your house burns down and you realize that the insurance company doesn't pay you for burned up cash. I've got everything in a savings account, or I've got everything in a safe deposit box. Ever heard of bail-ins? Okay. Everything is at risk. Your objective is to diversify it and reduce it. If you want to take more, that's up to you. Sure, you want to be aggressive. You want to go buy NVIDIA or some hot stock or whatever. And hey, you may do great. You want to go buy crypto, for example. I mean, everybody, crypto was 4 cents and it went up to 70,000. I guarantee you there's nobody that owned crypto at 4 cents that still held it at $70,000. Everybody sold along the way, or at least sold some of what they had along the way. But then you look at crypto in the last 6 months and it's done nothing, okay? It's at 70, it's down to Bitcoin. It went to 70, it dropped down to about 60, and now it's just bouncing there in the same area, okay? It's no longer a, secret. Everybody knows about it, so it's not going crazy anymore. Could it go to 500,000 like some people call? Sure, Silver could go to 500 too, like some people have called. Crypto could also go back to 10,000. Silver could also go back to $10. That's possible too. You got to remember, for everything that goes up, or everything that goes up must come down. It does happen that way. I'll go back to my days as a broker in the late 90s when I was just getting started. And America Online. Everybody remember AOL? It still exists somehow. Okay. And man, was that the darling. Everybody was buying AOL. Go take a look at what the stock's worth now. Everything that goes up must come down. There's lots of companies out there that used to be darlings. I mean, I joke all the time about Singer sewing machines, or take a look at Eastman Kodak, or any of them that were favorites. And eventually they fall out of favor. Everything else does too. What I'm saying is, with the election coming up, position yourself so no matter what happens, if the market goes to the moon or if the market goes in the tank, I'm talking about the economic market, not the stock market, you personally are protected. Don't worry so much about what they're talking about with GDP and all the macro issues. You need to worry about the micro issues, which is your checkbook, your bank account, your savings, your retirement. Not that that's any, oh my God, you know what? I never thought about that. I've got to think about myself. No, not thinking that anybody has ever said that. But bring it back down and go, okay, we're going to see a paradigm shift after this election. How can I protect myself? Because, it's going to be a change. want to be safe. You don't want to find out that the day after the election, Donald Trump won and the market crashed, or Kamala Harris won and the market crashed. We don't know what's going to happen. You get the pundits who have their ideas, but they don't know. They're going off of historicals. And like I said, with Donald Trump, historicals mean nothing. If forever the market returned 3% under Republican presidents and he quadrupled that to 11.8, I'm not quoting historicals on it. We don't know what's going to happen. Cover your butt. Prep yourself financially. Take a cushion, as I said the other day. Maybe move to cash in your 401k between now and the election, and until we know the results. If it goes up, it might go up 1% or something like that. It's not going to go up 30% in the next 2 weeks. Not going to happen. So maybe you lose out on a teeny tiny bit of upside. The market could also tank. Okay. If it does, then you can go buy back in at lower prices. All right. But at least you knew you were safe. Take the risk out. We got enough risks in life. Don't risk your future. Pinball out.